Welcome to today's Daily Report Market Analysis videos with me, Richard Perry, Market Analyst at Hantec on Wednesday the 8th of July. There is a slight move towards a less positive risk appetite today. We've seen that in the US market yesterday, the yield curve was slightly slightly bull flattening, which suggests that longer dated yields have fallen away at the expense of basically flat, shorter dated yields, and that is just pulling these yield spreads lower again. Now that tends to be coming as risk aversion sets in, and it is interesting that what we saw yesterday was the S&P 500 falling over a bit, and that has sort of fed into these European markets today. A slight degree of dollar support coming in, but generally the trend still remains lower on that dollar. This is an interesting one here. Gold, 1798. That hit $1,800 for the first time since 2011 yesterday. This morning, and certainly remains on that bull run. So that is one market that is benefiting at the moment from these moves, although essentially forex majors are fairly choppy. There was a bit of upside move on sterling yesterday on a bit of more positive outlook to the Brexit trade talks, although that has unwound slightly today. The risk aversion is hitting Aussie and Kiwi. Aussie being my chart of the day. I will talk about the implications of that in a bit. Right, in terms of data points today, well, we've got the US crude inventories really, and that's it. That's at 3:30 because, let me just show you, and that's expected to show another inventory drawdown of 3.1 million barrels after that was a surprise drawdown, 7 odd million barrels of drawdown last week, which was actually the biggest drawdown of the year, interestingly. And we're expected to see another drawdown today. Now, it'd be interesting to see if that starts to generate some support for oil, because oil's just been a little bit lackluster in the last couple of days. It might G that oil market up a bit, but at the moment it's pretty much flat again, a shade lower on oil. But right, okay, so that takes me to my chart of the day. Australian dollar, really interesting chart, I think, because we saw the Australian dollar start trying in the wake of the RBA yesterday. It initially fell, then found a bit of support, but then just started to fall back into the close again. And we saw this slightly negative looking candle formation yesterday. It's fallen over again today amid risk appetite concerns. So we have got this test of the uptrend. Now, I'm still sort of looking at this Aussie. There is a positive bias whilst this uptrend is intact. But the question marks are surrounding whether the bulls can actually break out of what is essentially this trading range now, 67.75 up to 70.60, that range over the past month or so, just sort of starting to roll over. There, very much close ties, I suppose, Aussie to US equities, really, if you look at the charts. This rally that we've had on the Aussie couldn't quite breach that 69.75 level of resistance that we got through in late June. You couldn't do that on a closing basis, and then just started to fall over. So we've got this resistance that's now building up overhead. Now, if the Aussie starts to breach this uptrend, that would be a concern. Look at those momentum indicators. Those MACD lines are not doing especially well. RSI is a little bit more positive, but essentially it just suggests that it's going to be probably holding this range, I think, these moves that we've got at the moment. And even if it does break that uptrend, it doesn't necessarily mean it's going to be falling sharply. It just means it could be playing out a consolidation. So we'd be watching these stochastics. Are they about to sort of decisively pull lower and confirm that bear cross? If that is the case, then you'd start to look at the supports within this uptrend. You've got 68.30 being the first main support, but essentially you've got a band of support, a good band of support, 67.75 up to 68.30. So I'd be watching for that. But looking on this hourly chart, there is still a positive configuration on a general bias. RSI on the hourly tends to find buyers coming back in around the sort of 35 to 40 mark. MACD lines have essentially just unwound. So this is an important crossroads, I think, around this uptrend. And if this uptrend can hold, then obviously the bulls are staying in the driving seat. although it seems to be a little sort of tentative of a push forward, but still it would be then opening the test of 69.75 again. So really interesting times for Australian dollar, and can it start to regain the upside initiative on a decisive basis? So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos, go to our website, sign up for our webinars, and also click to watch our Trader Talks videos to gain some top trading ideas.